How would you describe Vitaliy to a friend who's never heard of him?
Vitaliy. I'm the one who came up with his with the most famous description of the paranoid Russian Jew who I trust with all of my money.
How would you describe Vitaliy to a friend who's never heard of him?
A paranoid Russian Jew.
A paranoid Russian Jew who takes care of your money.
What is something that Vitaliy has written or said that has stuck with you?
His embrace of stoicism.
That's the virtue of stoicism.
Yeah, I think the Stoic idea that resonates with me the most is the notion of not being too emotionally involved with the day-to-day decisions that you're making. So at the end of the day, you realize you're doing the best you can control what you can control. What you can't control is actually a very, very, very small piece of the larger environment. And whatever happens that's outside of your control, to accept it with poise and equanimity.
Well, thank you everyone for coming. I truly, truly appreciate it. I'm very humbled. First of all, let me tell you what the program is going to be like. We're going to have introductions for about 10-15 minutes. Then we have maybe a few minutes, maybe I'll answer 2 or 3 questions. We'll have a small break, and then we'll continue with longer Q&A. Okay? So, the IMA has gone through an incredible transformation. In January 2020, we managed $100 million. Today, we manage over $800 million. So we've gone through incredible transition, except nothing about the company has changed. Like, we manage more money. We're still obsessed about the same things we're obsessed when we manage $100 million. I don't look at IMA as a profit machine. I look at IMA as basically, as Warren Buffett would put it, my Sistine Chapel. And I wrote about this recently. This is basically my passion. And I get to do actually what I love, right? I get to write, I get to invest. I wake up in the morning and I write, and then I come to work and I get to invest for 8 to 10 hours. And those 2 passions have one thing in common: I get to learn. But IMA is basically built on 2 values. One is quality, another one is kindness. And we are at IMA obsessed about quality in everything we do, from our research process to customer service to in every single activity. Like, if you look at your name tags, I cannot tell you how much time Cyrus and the team spend obsessing about the design of the name tags. Because if you do, once the way you do one thing, you do everything. And the kindness, because, well, I want to leave the world a better place, right? And if we treat people with kindness, and this applies to our clients, to our employees, to our vendors, everybody, then you actually have made a difference. Combine these 2, and that's basically what gives us meaning. So the book you all got is one of my favorite books I've read probably in years. And it's probably the best book on creativity I ever read. It's by Rick Rubin. And if you guys don't know who Rick Rubin is, he is a guy who doesn't know how to play instrument, he doesn't know how to read music, and yet he's one of the best music producers in the world. If I knew artists who are not dead, I would name you, but whose music he produced. But my kids tell me that, John, you can tell me probably some.
Yeah, I mean, he produced for the Beach Boys, Beyonce, Jay-Z, and almost every big artist you can imagine has worked with him at some point in their lives.
Exactly. All right. So, however, when you read this book, I'm going to give you advice. Don't start with the first chapter. Start with a chapter called Patience. It's in the page 113. Now, the reason for this, because every single day for the last 2 or 3 weeks, probably even longer than this, I listened to this book on Audible, and you can actually, it's also available, by the way, on Spotify. I listened to this chapter, which is about 5 minutes long, at 0.8 speed. And this chapter kind of basically slows me down and focuses me on being a better creator. And by the way, investing is a very creative activity. And I listen at 0.8 speed because I want to experience life at 0.8 speed. I want we're all given so many minutes in this life, and we can rush through this at 1.5 speed, or we can go slower and actually inhale life. And this book, this chapter on patience, that chapter kind of slows me down. And so I'll give you one example actually. Let me give you a real example. So I just wrote a new book. It's called What a Life. And this book needs 30 illustrations. For every chapter, I need to have an illustration. And the illustration is something I basically create using ChatGPT. However, it takes me about 1 hour to 3 hours to create one, because I'm basically able to talk to AI, describe what I want, and then I iterate. Okay? So when I started working on this, I was thinking I need to create 30 illustrations. Today, I say I just need to create one. And then I'm done with this one, I'm going to go to the next one. And when I work on these illustrations, I'm not hurrying through it. I'm just really experiencing it. And it gives me a huge amount of meaning. Anyway, this is one of the best books on creativity you ever read. And I absolutely love this book, so I hope you enjoy it. Now, I'm going to introduce some colleagues, and then Cyrus and Jonah will introduce others. So I'm going to start by introducing Max. Max, get up for a second. So Max is our analyst, and believe it or not, he traveled further than anybody else in this room. He came from Kiev, Ukraine. Yeah, so it's so you know what, a couple of years ago when Americans would travel to Ukraine, they would bring drones. Well, Max called me up and said, listen, I know you have this war in Iran and you guys are short on drones that fight their drones. I can bring you a few. So, no, but Max is an absolutely incredible analyst. He worked for IMA now, actually, it's 4 years, more than 4 years now. And this is one of the cases where Max made me a better investor. It's not supposed to happen like this, but Max actually is a phenomenal analyst and made me much better investor. Thank you, Max, for that. Right next to Max, to the right, Alfonso. We have Alfonso, who came all the way from El Paso. And Alfonso is helping us to basically integrate AI into our research process. AI is not in the future. AI is right here. And so we're taking it extremely seriously, and with Alfonso's help, we integrate it in our process. And Alfonso probably, as he told me, he hasn't written the code in the last 6 months because he's been vibing mostly code over the last 6 months. Anyway, thank you, Alfonso. Thank you very much. Okay, let's address the 6.3-foot elephant in this room. This young gentleman right here, my son Jonah. So Jonah joined the IMA in July, August this year. And even though he did not have to go through 5-hour interview, which is typical what we do when we hire people, just ask Cyrus, he'll tell you this. Cyrus, where are you? Oh, right here. So ask Cyrus, he went through that. But he is the best person for this job, and he deserves this job. He's our creative director. And to be a creative director, you basically need to have 2 skills that rarely you can see in one person. You need to be very creative and organized at the same time. And usually you have one or the other. You cannot have both. He has both of them. And a few months ago, he was being poached by somebody, and they paid him, they were going to offer him 2 or 3 times more money than he's making at IMA. And he thought about this, and he decided no, he wants to work here. So this is for Jonah, this is more than just a job. I think it's a life choice. By the time your kids leave for college, you spend 90% or 95% of your time with them. And I'm very lucky because I get to spend a lot more than 10 or 15% with my kids, or with my son at least, because I get to see him every day at the office for 8 hours a day. So I get to build my masterpiece, and that's IMA, and I get to work with my son. What a life! Anyway, so Jonah, you have a few words to say? All right, and so you got the microphone? Okay, I'll wait for you here. Okay.
All right. Well, my name is Jonah Katsenelson, and I've been very fortunate to meet many of you over the last few years. Although, unfortunately, you may know more about me than I know about you. Thanks to my father's prolific writings about my personal life. And I'll tell you, when your teenage arguments and failures end up in essays read by thousands of people, you learn very quickly that privacy can be a little underrated. I grew up at IMA, and I mean that literally. After school, I'd sit in the office while my dad worked. One of his interns, Gavin, was the first person to show me how to use Excel. My dad brought me to investing classes he taught at CU Denver, lectures at different events, meetings with management of portfolio companies, reader get-togethers, and investing conferences all around the world. Before I worked for him, I thought he included me in those things because I was his son. Those of you who have spoken with me in the past know me by 7 iconic words. I will never work for my dad. So you may be wondering what I'm doing up here on stage. And I'll tell you, I said those words for many years, and I meant them every time. But I was wrong. And here's what changed. After college, I worked as a financial analyst at a public company. I reported directly to the C-suite, built models, gave presentations to rooms full of people twice my age. It was a great education, but the most valuable thing I learned was what I didn't want to build. I watched smart people spend their energy managing a stock price instead of managing a business. I saw executives turn a blind eye to ethics and lean into a narrative. Most importantly, I saw what happens when the incentives point the wrong direction. And when I'd come home for holidays and listen to my dad talk about his job, he would talk about his clients or a stock he was fascinated with, or a new idea that he's hyper-focused on. I realized I had an opportunity most people don't get, to work alongside someone who isn't distracted by shiny things, who has a strong moral compass, and who is an unconventional but effective leader. The thing I said I'd never do turned out to be the thing most worth doing. Now, having spent the better half of a year at IMA, I realized that my dad treats his employees the same way he treated me growing up. He wants to empower the people around him. He pushes everyone to educate themselves, to remain students of life, and to constantly learn and grow. Fun fact, he actually gives us homework. If he reads a book or watches something that moves him, the whole team is getting a copy by Monday. And he's not gonna wait to send that really interesting YouTube video till Monday. Sometimes he'll just send it on a Saturday night at like 12 a.m., so you should be sleeping by now. Anyway, so I joined IMA in July of 2025 as creative director, which, let's be honest, it's a fancy way of saying I do everything that my dad and the IMA team doesn't want to do. Now, don't panic. I have no plans to manage your money or make investment decisions. That's not why I'm here. My role is to give my dad the freedom to focus on what matters most, investing and writing, while the operations team led by Cyrus makes sure every interaction you have with IMA reflects the same care, integrity, and thoughtfulness that guides the way that my dad manages your money. Every day, my dad receives emails from readers who say that his writing has changed their lives for the better. And if you haven't guessed, they're not talking about his investing books. My job is to make sure that his message reaches people who need to hear it, which means I have the impossible job of marketing a business that has no desire to grow. But that's what makes this place different. IMA isn't trying to be the biggest. We want to be better at what we're already good at, Rubin wrote something that I think captures this perfectly. To hone your craft is to honor creation. It doesn't matter if you become the best in your field. By practicing to improve, you're fulfilling your ultimate purpose on this planet. That's what I see every day at IMA. When we're at lunch, we're not making small talk. We're discussing how to improve our systems and how to be more intentional with our communication. Because everyone at IMA wears many hats, we all have visibility into how the business works, which means we brainstorm and solve problems as a group. It's a small team that operates like one. I'm really excited to be here, and I'm looking forward to earning your trust the way that my dad and his team already have. But really, I took this job for one reason, to finally make something very clear. My sister is not a better skier than I am. All jokes aside, I want to introduce someone very special. Whenever I second guess myself at work, Cyrus is the person I talk to. He's a great listener, and more importantly, he's very intentional in how he gives advice. By the way, he and his wife Emily are expecting soon, and we couldn't be more excited for him. Can we give a round of applause for that? All right, all right. I'll let him tell the rest. Please welcome Cyrus Perot, our Director of Operations.
Thank you, Jonah. That was really nice. I appreciate it. I've gotten the chance to speak with, and I think meet now, pretty much everyone in this room. But for those who may not know me, I'm Cyrus Perot, Director of Operations here at IMA. I'll be with Vitaliy 5 years this fall. Time flies. We wanted to take a moment and introduce the operations team a little bit more formally, since we work in the background, frankly. There's a few people that aren't with us here tonight, but I'd like to give them some airtime. Technology. We use technology a lot at IMA. We have Dragon, who is in Serbia, as well as Nadia, who is in Brazil by way of Bulgaria. Both of them help us with tech, our systems, helping keep everything running smoothly. So, we also have Melissa, who is not here with us at the moment. Melissa's been wonderful helping with our organization, calendars, logistics, projects. Sadly, she's leaving us for personal reasons, but she'll be helping find a great additional team member. We also have Barbara in Buenos Aires. Barbara is our bedrock of operations marketing. She helps with account onboarding, client communications, helps with the dissemination of Vitaliy's globally read newsletter. Barbara's wonderful. We also have Robert. Robert, if you could stand up for a second. Robert is my fantastic colleague who helps me daily with the trading, transfers, tax questions. He's also our financial planning powerhouse, if I can say that. As an aside, Robert takes the CFP, Certified Financial Planner test, I think some point later this year. I am convinced that Robert could write the test, not just take it. So kudos to Robert. Thank you. And lastly, myself. So I help with trading, and Robert and I both trade, so we have some redundancy there in that system, as well as help with tax questions, compliance, and generally thinking about systems and how to improve the operations at IMA. So yesterday, I was thinking about what else you'd be wanting to hear from me. Myself and my family as clients, we would be interested a lot in the investment process, the outlooks, the risks, everything that Vitaliy is going to speak about. That is all Vitaliy and Max's world. In operations, our world is to bring that portfolio to fruition as smoothly as we can. I'd like to use an analogy. If you have a restaurant, Vitaliy and Max, they are running the kitchen. Us and the operations team, we are running the dining room. For a quick story that Vitaliy will enjoy. Several years ago, we studied the book Unreasonable Hospitality. This book is about 11 Madison Park. It's a fantastic restaurant in Manhattan. At one point in time, circa 2017, it was the world's #1 rated restaurant. A little subjective, but incredible restaurant, is what we can say. We visited 11 Madison in 2023. At that point in time, it was, I believe, the world's only 3 Michelin-star vegan restaurant, which was great. It was great. It was an experience. But exactly. The point is, what we wanted to do was study how they were the best, what they did to make the great food plus great service just create an incredible experience. To continue this analogy, our chef, Vitaliy, his goal is to create the best meal, the best portfolio he can. And our experience is to have that best presentation, that best dining room experience that we can for you all as clients. So what does that mean? That means efficient trading, answering tax questions, facilitating transfers, or frankly, just being available, knowing that we are available. We have access to the decision makers and the research team, and we're not a call center. We're also not a chatbot, even if it was an AI chatbot. So, to finish, I want to speak quickly about the IMA culture and the IMA tribe. As IMA culture is concerned, quirky is the word I'll go with. I think it's the best word to describe us. What you read in the newsletter is real. We are quirky. The office is pretty informal, especially when Larry David, the toy poodle doodle, graces us with his presence. We also, as Jonas said, eat salads every day together. And I'm not talking Safeway bought salads. We have decadent, healthy salads we all prepare. We all sit in our conference room, which frankly feels more like a nice coffee shop. And we discuss. Sometimes it's work, sometimes it isn't. Oftentimes it's philosophical, but always it's very intentional and very thoughtful. We also have Fever Tree Fridays. That's a new thing as of the last 6 months or so. So after trading hours, mind you, call it 3 p.m. onwards, we have a sample of Fever Trees, a sample of different alcoholic or non-alcoholic liquors, and again, we chat, we discuss, we connect with each other. I want to be careful not to take these things for granted. Prior to IMA, I spent some time in big corporate, and think Office Space, the movie from 1999, where there's the corporate monotony, there are the corporate absurdities, there's the water cooler talk, there's the TPS reports. Those are not things that exist at IMA, and that really means a lot. Lastly, just want to speak about the IMA tribe, and those are our clients and colleagues, you all. Our portfolio construction doesn't resonate with everyone, and that's okay. It actually creates some self-selection, and it makes us surrounded by thoughtful people. I can't tell you how humbled I am by the number of conversations I've been able to be a part of, be it at events like this, or when we travel and host client dinners, Jeffersonian style conversations, usually in connection with visiting the companies that we're invested in or potentially investing in, or even on our annual pilgrimages to the Berkshire Hathaway shareholder meeting every May coming up, or even our conference that we host in Vail every summer. It's really incredible to be a part of such a community. So with all that, we here at IMA are so glad you're here. Thank you all.
Great job. All right. Well, thank you, Cyrus. Thank you, Jonah. Thank you, team. Thank you, everybody, for coming. So now this is the Q&A part of the session. If you don't have any questions, it's going to be a very short event. So let's do 2 or 3 questions. We'll take a break and we'll come back to questions again. So ask away. Jonah is going to have a microphone.
Yep, just wave me down. I'll give you a mic. If you have a question, perfect. We already have one. All right.
I'm Eric Yakes. 100 million to 800 million. How has that impacted the scope of your investments over time?
All right. Yeah, thank you, Eric. So far, let me answer a broader question. So as we've grown, how does the size of the company has impacted us at all? So the size of the company impacts you 3 ways. Your ability to buy stocks, your ability to service clients, and basically maybe those 2 things, your ability to service clients. So today we need, when we buy stocks, we need liquidity about $10 million, $5 or $10 million a day. That started to limit us so we can buy companies $1 billion and above, or maybe $1.5 billion and above. Fever Tree, I think, is $1.2 billion or something, so we still own it. Here's the good news. I don't have a great statistics on this, but probably 95% of companies listed on the New York Stock, globally, are above 1 point something billion. So it hasn't really shrunk our investment universe significantly. From another perspective, we are somewhat constrained by how many clients we can have. And the constraint actually comes now not in how many, in trading, because we have incredible systems in trading, but the constraints come is that in customer service. So at some point in the future, we're gonna start slowing down the growth. Like, we're gonna maybe start accepting fewer clients. It's not there yet. It's not gonna impact anybody in this room, obviously. Just because I don't necessarily want to have a huge company. Let me get off topic a little bit. It's something I want to talk about. Jonah, where is Jonah? Jonah, my brother Alex, who sits right there in the pink shirt, and I, in January, went on a horological tour. We flew to Geneva. Well, actually, we went to Geneva and we rented a car and we drove through Switzerland. And we visited watchmakers that make like tiny watchmakers. Some will make 80 watches a year, some will make 30 or 50 watches a year. Some make 400 to 800 watches a year. And I was so touched and blown away by those people. Because, let me give you an example. If you think about Rolex makes about 1.1 million watches a year. Patek Philippe maybe makes 75,000 watches a year. So if you look at Rolex is a company that makes a very good industrial product. It's a terrific product, but it's an industrial product. You're gonna have an assembly line of people sitting there and assembling each watch. It's just an assembly line. When you make 50 or 100 or a few hundred watches a year, it's a very different process. It's a process of true craftsmanship. It's a process where you take risks. Rolex doesn't take risks. Okay, if you look at the watches of the last 100 years or the last 50 years, they haven't really changed much. They may come out with a different buckle or something, or a different dial, whatever, but it's really the same watches because they're trying to appeal to an average person. Now, the people at this, so there is a French word, which I actually knew in Russia. I did not know it was French, atelier. Atelier means workshop, okay? If I could go back, I would name IMA Atelier, or because that's what I want us to be. I want us to, so the people we met this company, one of my most favorite watch companies in the world, has nothing to do with watches, called MBNF. Look it up. It stands for Max Busser in France. This company makes 480 watches a year. And they take incredible risks. And if you look at the watches, they don't look like watches. The guy, Max Busser, who runs the company, he's just really obsessed about one thing. He wants to create art, okay? And he limits his company to 480 watches a year because he only wants to have 75 people working for him. Because he feels if he has more people working for the company, then it's going to be more difficult for him to be creative. So I look at us as kind of atelier, and I want us to do the best work possible. I want to be able to have these dinners. I don't want to have a Buffett's arenas, okay? I want to have this kind of somewhat intimate company where I know clients' names, at least most of you. And the problem is I have a horrible memory, so if I knew your name, I probably forgot it anyway. So that's a different story. But the point is this. When I saw these watchmakers, I saw people who had in something that very few people have, especially when it comes to businesses. They had enough. They build the businesses, and they're not for the sake of making money. They build the businesses because they want to continue to create. Okay, and so this is how I look at IMA. So at some point, the good thing about IMA or investment management business is a lot more scalable than watchmaking. One thing I'm going to leave you with this thought on this topic. We need to look at MBNF. When I talk about Rolex, remember how I told you it's an assembly line. At MBNF, every single person, so one watchmaker assembles a watch from start to finish. And they don't tell you how much time it should take you. If it takes you 2 weeks, it's going to take you 2 weeks. If it takes you 4 weeks, it's going to take you 4 weeks. All they care about is quality. Okay? If you buy their watch, they're going to be serial number. And by serial number, they can tell you which watchmaker assembled the watch. Okay? So this is kind of like I made to remain long term. Okay? So the good thing for you, that means you're going to have great service. If our service starts to deteriorate, we just completely going to put brakes on growth, because at the end of the day, I'm building the Sistine Chapel, and that's and that doesn't have to be the biggest chapel. It just has to be the best. Anyway, Eric, that's not the question you asked me, but that's the answer you got.
Cool.
All right.
Cool. We'll do one more question and then we'll let you guys eat.
Hi, Laura, Angelo. I'm going to sit. You talked in your letter about expanding and being more international in your look going forward. And I wondered, do you select an area of the world and then find the company that you like there? Or how do you use that approach?
Thank you, Laura. So it's kind of all of the above. And let me explain what I mean. We sometimes Max and I run screens looking for a company that may look statistically cheap. And they may show up and we may screen like the world, 25 different countries, like maybe excluding China or in India because we can't buy stocks there, or in China we don't want to buy stocks there. And we may stumble on a stock this way. Sometimes we may look and say, well, this market is down a lot. Let's say British market is down a lot. Let's look at British companies. Sometimes we say, well, when you look at the globe, which countries scare us the least? Which gets more and more difficult lately. And then let's look there. So it's all of the above, and it's kind of somewhat random process. And a lot of things about investing is random. You want to continue creating this randomness. And so today we own stocks, but you still own stocks in Germany, France, Sweden. Max, help me out here. UK. Thank you. UK. I'm probably missing a few countries. Used to own a company in Italy. So a lot of it has been, we used to own a company in Japan, still own a company in Japan. So our rule is very simple, where to buy stocks. If I can write a very scathing article about the country's leader, and would I be afraid to travel to this country after I wrote this article? If the answer is yes, then we're not going to invest there. So, but a true story. I remember 2010, I wrote a negative article about Putin. 2009, and my brother Alex and I were going to travel there. I just did not publish the article because I figured nobody knows who I am. But if I jaywalk, they pull me over, and then they Google me and they see I just wrote this negative article. Who knows? Anyway, I hope I answered the question. Thank you. All right, let's take a break and come back in 15 minutes. In the meantime, think about your questions. All right? All right. All right, well, thank you very much. Okay, continue the questions. All right? Right there, Chris.
Thanks. Hi, I'm Chris Hooper. Last year at this talk, we talked a lot about the trend of European countries in particular spending more money on defense. And that was a big theme, and you were ahead of it, and which was awesome for all of us in this room. I'm wondering what trends you're following right now and thinking about, particularly with the latest conflicts in the Middle East.
Thank you, Chris. What trends? I don't really. So the question is, what other new trends I see? Or sorry, I'm sorry, Chris. Can you clarify the Got it. All right. So I don't think I have an obvious trend like that today. Okay, so in fact, we've been diversifying a lot lately. Like if you see number of positions in your portfolio has increased. And I don't think I see something that's very obvious today. Like a few years ago, we bought oil companies. That was another trend, and that's been helping us now. But I don't think I can see like this industry is undervalued or there's this trend. And one trend that is still represented in your portfolio is that we still have a significant amount of money invested outside the United States. And that's something is unlikely to change soon, unless US gets much cheaper. That's possible. But I don't see any obvious trends today that I say, like defense or something. I don't really see it. Other questions?
Okay, I have a two-part question, I guess. The first is the recent deal between Uber and Rivian and how that affects your analysis of Uber. And second, if you've done any kind of analysis on Rivian like you've done on Tesla.
All right, thank you, Evan. Evan, sorry. It seems like Uber announces a new deal a day, so I assume a Rivian deal is similar to a Lucid deal, where they basically going to be buying a whole bunch of cars from them, right? Is that something similar? The Rivian deal.
I think it's they made some kind of deal with Rivian to go forward on a AI, whatever it is, non-driver taxi service, robo-taxi service.
Got it. All right.
Yeah.
So let me answer this question broadly, okay? Because it's a lot more than Rivian. So what Max and I are looking today at the companies we analyze, we want them to be like Uber and like Uber's management. Uber's management is not saying, yeah, this whole self-driving thing is overrated. And they're not saying like, this whole, they are being very proactive. They're not sitting still and basically just kind of have a, life passing by. So Uber is placing a lot of different bets. They don't know which ones are going to play out, but they want to be in every single path possible. And this is what I love about that management. So they basically think that the business model in the long term will change. And Dara, the CEO of Uber, uses this analogy of, if you look at hotel industry today, used to be like Marriott used to own the buildings and then they run the hotels, right? And then they spun off the buildings into REITs. And then because the REITs got cheaper capital, and then they would run they would just manage the hotels. So what Uber is doing in self-driving is very interesting. It applies to Rivian and other business deals they do. And they're basically saying this: in the future, most of the rides are going to be self-driving rides, but somebody has to own those cars. So here's what we're going to do: we're going to put a taxi park or car park together. And we're going to put a car park together. And then we're going to, let's say it's cost $1 billion. They're going to raise capital from a REIT-like investment, and that's going to own the cars. And Uber will be the one managing the cars. So they're still going to have an asset-light model because they're managing the cars. And they will be just kind of, now they have a switch, basically a switch station, where you have riders and drivers. While in this case, they're going to be owning, or they will be providing the cars themselves. So that's going to be one of the business models. So that's my answer to your first question. And the second question, I have no idea about Rivian. I know people who love the car. I drove it. I didn't care for it. But my son Jonah loves Toyota 4Runner, and I don't like it. Jonah drove Rivian, he loved the car. So I don't know. So who knows? That's where we are. All right, next question.
Steve Tordo, Nevada. So I'm noticing the number of holdings creeping up. Do you have any feedback on that?
Oh, yes. Well, thank you, Steve. All right. I'm going to answer two questions because I'm going to preempt the question about AI, and then I'm going to answer your question. How's that? All right. I don't think I've been as excited about investing as I've ever been in my life. I absolutely love what's happening right now. At the same time, there are the range of possible outcomes for any stock we own got wider. Okay, so AI is an incredible disruptive force, and we really have no idea where it's going to show up in our portfolio. So therefore, we decided that, remember, this is a paranoid Russian Jew portfolio, right? And so my goal is to survive first. And the way is to survive, if there is a risk that I did not anticipate hits us, then the impact on the portfolio is going to be minimal. Now, what's great about this, we're using AI as well. So Max and I, it's almost like we have a team of analysts working for us now. And therefore, it helps us to do research much faster and go deeper in research. So our portfolio went from 20 stocks to 30 roughly. So that 30% increase in number of positions means we have to do more research. But also means that we reduce individual stock exposure a little bit. So I don't think AI is going anywhere. I don't know when it's going to change. I don't know when we're going to go back to 20. And maybe after a while, as the risks shake out and we're going to have more certainty about things, we go back to 20. I don't know when it's going to happen, but it's done deliberately. And by the way, we are doing it at our we still have to do more work, right? So we're doing it for your benefit, not for our, well, it's not true. I own the same stocks you do. My portfolio looks very similar to yours. So I'm doing it for my benefit as well as for yours. But we just want to reduce the risk of the portfolio. That's why we have more stocks today.
Thank you. I have one other question that's
Sure.
more about economics than anything. So this past winter, the market was going crazy, okay? Gold was going crazy. Bitcoin was going the opposite direction. And now we're messing around over there in Iran and gold prices are dropping. Any sense you can make out of that mess?
I have no idea why gold prices go up and down in the short term. I don't know what if you and I talked 5 years ago, I would have told you that I'm not going to own gold. I have changed my mind on this, and we own gold through call options on gold. And I'm still uncomfortable owning it because I have no idea what it's worth. The only thing I know about gold is that United States runs 6% budget deficits while our economy is not in a recession. Like our economy is supposedly doing fine. I'm scared to find out what our budget deficits are going to be when we go into recession. And so when you run 6% budget deficits, that means that you borrow money all the time, and you make dollar a little bit less valuable all the time. And we can debate gold, Bitcoin. But I would argue is that one quality that gold has, it's you can't make more of it. And gold is a 5,000-year-old story that has been more or less accepted by a large number of people. And this is why, I don't think it's crazy to own some gold, but I have no idea I don't know why, I have no idea why it's going up and down over next, in the short term. It's just, nobody knows really, honestly.
Thank you.
Next question, I think right there.
All right. Shorter walk this time.
Doug Cromack from Texas. One of your recent newsletters, you talked about U.S. healthcare,
Yeah.
and specifically with Molina.
Mhm.
I thought it was kind of an interesting interpretation of how we finance it. I was wondering if you could expand on that a little bit.
Sorry, just want to clarify, how are we going to finance our healthcare? Sorry, I just wanted to.
Well, you talked about the model that Molina was, how it fit into delivering
Yeah.
healthcare
Yes.
and how to finance it. And I thought it was kind of an unusual interpretation of the insurance industry and where it might be headed.
Got it. Thank you. Okay, so number one, when we talk about health insurance companies, they are not really in an insurance business, really aren't. They're really in a they're like really logistics companies for healthcare. They're there just to process claims, but really it's there historically. They weren't there to take risk. If like insurance companies historically knew exactly what their costs are going to be, down to maybe 10 basis points. And so it wasn't really an insurance business because if you look at the margins, they were they're very consistent. What has changed over the last year and a half, 2 years, was that inflation in the healthcare industry has been higher than expected, and it persisted for much longer than people expected. Now, if you slice health insurance, if you slice U.S. healthcare, and that you basically have Medicare, Medicaid, and private insurance, right? And then you have uninsured, but that's a tiny number of people. Private insurance, which is corporate basically, or private. Okay, so when it comes to Medicaid, and Medicaid is basically insurance, it's a health services, health insurance, if you want to call it, for poor people, right? And Medicaid is administered by states. And if you I'm going to stop for a second because I'm going ahead of myself. Let's go back to inflation. I skipped the inflation part. So if you look for the last 2 years, we had a very high inflation in healthcare and it persisted a lot longer than people expected. If you look at every single insurance company, they reported that their costs were much higher than expected. And so if you look at the whole sector, it's probably down 30 to 50%, depends on the stock. Now, the reason the healthcare costs are higher because during the pandemic, a lot of people did not postpone their procedures. A lot of people did not go to the doctors, and then pandemic passed, and they went to the doctors again. For reasons I can't explain, utilization of mental costs are going higher. There is the GLP-1s, increased healthcare costs too. So there is a lot of factors that are somewhat unique to today's environment. Now, what happens to the Medicaid insurance companies is this: they are operated on a state level, and so every state, the actuaries at the state level basically try to figure out what the costs are going to be, and then they come to insurance companies going to say the costs are going to be this much, we're going to pay you this much. Okay, and they usually, these companies make about 3 or 4% margin, maybe 2 or 3% margin. Okay, well, they've been wrong about costs for the last 2 years. So our bet on Molina is very, very simple. This is a low-cost producer in that space. They are the company that has by far the low-cost producer. They have about 2 or 3% margin advantage. What it means is this: when this company is breaking even, their competitors are losing 3% margin, just in the very simple terms. So where their competitors were making 1%, they were making 3 or 4 or 5, or whatever that number is. So today, Molina is making very small margins. The competitors are losing money. So now, very pragmatically, is this. This is how I look at it. If the government does not raise prices to reflect the reality, then you're going to have 70 million people who are going to get uninsured. That will not have healthcare services because Molina's competitors will just simply go out of business. I don't think you and I think is going to happen. So what's going to happen? At some, it takes time. The pricing will start reflecting the economic reality, and then Molina's profitability will go up. I don't know when it's going to happen. By the way, when we buy Molina stock today, we're basically, let me just give you my analysis in 30 seconds. It's a $150 stock. When their profit margins come back to normal level, this company will earn $30 to $40. If you want to put 10 times earnings on $30 or $40, you're going to get a $300 or $400 stock. And I've been very conservative when I tell you this. So in other words, if you close your eyes, 3 or 4 years from now, it's going to get to $300 or $400 or even more. However, in the short term, we can wake up tomorrow and it's going to be $100 stock. And the road to the 300 to 400, I have no idea. But this is why the opportunity exists, right? Because who wants to own a stock that may decline 30% tomorrow? Well, and that's why nobody wants to touch it. And this is why it's so cheap. At some point, I'm willing to take that. I'm willing to take that. I'm willing to take that volatility risk. It's not a permanent loss of capital risk. It's a volatility risk, and that's basically our approach to Molina. I hope I answered your question. Yes, right there at the end, at the very end of the room.
Hi, Vitaliy. Ray Cox here. First IMA dinner. Lovely, wonderful, enjoyed it. But I've got a philosophical and historical question for you. So I've got 8 words from Ben Graham. Safety of principle, adequate return, margin of safety. Mm-hmm. I'll take 3 of those words, safety, adequate, and margin, and ask how your view of what is a satisfactory level of each of those has evolved over the past 40 years. In other words, was it easy to find stocks 40 years ago that met those criteria and harder today? How is your fundamental valuation of whether this is a good investment or not changed given, for instance, some of the risk shifting into essentially inflation?
Right, safety, margin, and adequate return, right? Well,
margin and adequate.
Okay. So I would put adequate and margin of safety kind of in the same category. So it's really 2. So I think our portfolio speaks for itself in the sense that new accounts today are probably 30 or 40% invested. Existing accounts today maybe 70, 80% invested, and the amount of cash has been going up as the stocks have been appreciated. We've been kind of reducing up our positions. The way for us to increase safety, margin of safety, and adequate returns was to go international, because we could not find enough stocks in the United States. Well, you look at the United States today, the market has the highest valuation in 100 years. So that didn't get easier. Some of the international markets went up, so that's removed some of the opportunities. So I think in investing, and actually I would argue in life and when you run companies, one of the most difficult things to do is to do what other the opposite what other people are doing. In other words, not because you're doing the opposite, but because you are doing a difficult thing because everybody wants you to do something else. So the beauty of IMA is that clients came to us, and it's self-selection. Cyrus talked about it. Jonah talked about it. It's self-selection. People come to us because they want to preserve and grow their wealth. And a lot of times it means if I have nothing to buy, you're going to have cash. And I'll tell you, if you run a large mutual fund, you can't do that. Okay? And IMA clients, thankfully, giving us permission to do this because they chose us. And that's what we do. So today, it's very difficult to achieve those things. Now, it's getting more difficult if you reduce position sizes, right? So, and we have. So it's very difficult to find opportunities, and this is why we have more cash. And it's more difficult today than it was 3 years ago, 5 years ago, and before. And it was difficult then. So, and that's okay. So we will continue to do what we do, and we'll be doing difficult things. And all I ask from you is to be patient with us, because I don't want to buy stocks that don't have margin of safety, that don't provide adequate return, and that are, the way you define safety, low quality. They're low quality. So that's my answer. All right, let me talk about something I want to talk about anyway. So all right. So how's that? All right, and you can come artificial intelligence, because I'm shocked you didn't ask me about this yet. All right. So I have some messages for you guys. Okay. So AI. So I think AI could be your friend, or it could be your enemy. Today, if you let AI do thinking for you, then it's become your enemy. And the example I use all the time, 30 years ago, I had a beautiful penmanship. And then I started to use computers, and today, I can't write. The muscle memory is gone. So if you let AI do thinking for you, you forget how to think. If you let AI write for you, you forget how to write. So I think we have to be very careful the way we use AI. We have to be thoughtful, mindful. Let me give you a couple examples from my life. So when I write my articles, when I write anything in my book, I always type. Now, when I write emails, today I dictate into computer. Okay? Because I hate writing emails. This is not something I like to do. So I still retain my writing skills, my typing skills. I don't want to lose the muscle memory, but at the same time, it saves me a lot of time. That's number one. Number two, I use AI today as a smart companion, somebody I can talk to and learn from. In the past, I used to have a question, I would call a smart friend. Well, now I can still do that, or I ask AI a question. And I have conversations with AI, and I learn a lot this way. So again, if we outsource our thinking to AI, it's going to be dangerous, because we forget how to think. But AI could help us to become better thinkers. I'll give you another example. Today, I think AI it's become extremely important in our process. I'm obsessed about integrating AI into everything we do, in research and operations. I'll give you a couple examples. I'm going to put Cyrus on the spot. Sorry, Cyrus. Okay. But I basically went to our team and I said, Google has the 10% thing, where their employees can do any project they want at the 10% of their time, no matter how crazy that is. I said, I'm going to pay for your AI tokens. Take the time and find problems in your life that you can solve using AI. And so Cyrus wanted to convince his wife to move from one house to another. So he created this beautiful website that plugged into Zillow, into Google Maps, into schools ratings, and basically made this beautiful website that kind of made argument for this house versus this house. Okay, why did I do this? Here's why. In this new book I wrote, I talk about writer's brain. Okay, so let me explain what it means. I write every single day. And when you write every single day, you rewire your brain to look for ideas. I constantly look for ideas to write about because my brain is constantly looking for new material. Okay, like the same way my father has a artist brain. He always look for things to paint. Okay, well, guess what? If you start looking for ideas to implement AI on, you're gonna have AI brain in the sense that you're gonna look for, can we implement AI for this? It's gonna start with personal life. Over time, it's gonna spill into something else at IMA. So I encourage everybody at IMA to use AI as much as possible. By the way, that's the beauty of a small firm. Large firms, you're gonna have to go through legal department and the whole thing. Also, what's also important about AI is to have context. I'm gonna pick on my daughter Hannah right here, okay? This is a generation that learned how to drive with GPS only. When I moved to Denver in 1991, that was before GPS, right? And I had to learn the major streets, major highways, and I know where north, east, west, south is. I bet Hannah has no idea. Because here's what Hannah does, and I'm not picking on you, but because what she does, she uses AI. GPS is AI, right? You put the address, it takes you there. But here's the problem is that you have no context. Hannah wants to go to Boulder, and she put east versus west or something, and it's taking her to Colorado Springs. She will have no idea. So, and again, I'm very sorry. Not picking at you. But so when you work with AI, you actually still want to have a basic understanding of the core concepts you're dealing with. Okay, so because when AI gives you an answer, you have no context. Is it directionally right answer or wrong answer? So I spend a lot of time when I work with AI on a certain topic. I try to still create my own context window so I understand the topic at least on a very high level. What else about AI? I spend probably today maybe 4 or 5 hours a day, like either programming on AI or like today we subscribe to Claude, ChatGPT, Gemini, and Grok. And each one of them has advantages and disadvantages. Grok, because it's owned by it's integrated in X.com, has better access to latest news. So if I want to learn about latest news, I go to Grok. Claude is much better at, and I use Claude Cowork. It's much better at design, much better at editing, much better at what else I'm using for? Just in general, HTML creation. The ChatGPT is kind of more like universal tool. Gemini is very good for search. Like if you're looking for, if you want to search internet, so each one has advantages, and you learn, the more you use it, the better you appreciate one versus the other. So that's, if you want to have more specific questions about AI, I'm happy to answer them. But this is kind of my high level thoughts. Ed, you have a question right there.
So I think we can all agree that Ahmed Callahan from here in Denver. I think we can agree that AI is going to be transformative in ways we can't even imagine. But is it investable?
So today, everybody decided that the way to invest in AI is to buy NVIDIA, because that's the first level thinking. That's the most kind of direct way of thinking about it. I would argue that when everybody believes into something, it's most likely overvalued. When you analyze it, I wrote about this, but I'm going to repeat this. If I spent some time looking at NVIDIA stock and compared it to Intel, remember, until 4 years ago, it was almost a monopoly, right? When it came to personal computers, it was a monopoly. So if you look at Intel and you look at their margins after all the expenses, basically their margins before taxes. In other words, if the company had revenues of $100, they get to keep $30. That was Intel. Forever. This is a monopoly. okay? Today, NVIDIA's margins are basically 65 or 70%, as if it was a software company. Why? Because they can charge anything they want for because they're the only game in town. The thing is, they're not going to be the game. If capitalism works, they won't be the only game in town forever. So at some point, the margins will decline. They're going to have more competition, and suddenly, what appears to be relatively inexpensive stock will become expensive. So that's NVIDIA. In general, I found what not to buy and what to buy. We, for the most part, stayed away from software stocks. I'll give you one example. We looked at Intuit, the company that makes QuickBooks, TurboTax, and other products. And one thing I realized, 1/3 of the revenue comes from from tax preparation. I haven't done this yet, but I was thinking about, what if I just take my kids' tax returns from last year and throw their W-2s for this year? I bet ChatGPT can give me a very nice tax, prepare my tax in about 3 minutes. Do I still need to go to TurboTax and pay $70 for them? That's one example. And Jonah created this website. If you go to brkguide.com, this is the kind of the website that basically kind of gives my thoughts on the Berkshire Hathaway weekend, kind of my guide to that. Jonah built this website in 2.5 hours using Claude Cowork. And you look at this website, it's a beautiful, professional looking website. In the past, it would probably cost me $7,000 to $10,000. And more importantly, it was, would cost us would take us maybe a month to create it. 2.5 hours, he knows nothing about programming. So far, Ed, I found things not to buy than to buy. So the one thing you can argue we did is that we own, in some accounts, we own a company that has exposure to natural gas. That's our way to play, AI, because the more, it consumes a lot of electricity. Natural gas is the easiest way to get electricity generated right away. So that was our way so far. And we keep looking for ideas, but again, so far it's been more like what to avoid than what to buy. So yeah.
Can I add one thing really quickly?
Yeah, sure.
We're a very small company, and in the past, small companies would wear, every employee would wear several different hats. There was a lot of collaboration, but there were also a lot of unnecessary meetings and inefficiencies within small companies. Because at larger companies, there's a person who does their one specific thing and they're the best at what they do. And if anyone needs something from that person, they can go to that person. For us, it's a mixture of skills. And one of the tools that we use that's been very beneficial is within Claude, they have something called projects. And so if we're working on a project that requires some sort of prompting with AI, and it's a relatively repetitive system, instead of having to write a prompt, test it out, put it in a Google Doc, send the Google Doc to the team member, then explain them what it says in the Google Doc, which takes time, the person who's best at creating that task will make that task. They'll build that project. Then they'll ask Cloud Code, okay, great, give me a summary for my compliance person or for whoever is going to be dealing with that task. We have a team account, and they just go into that project, look at the context, and start working. And we just saved a lot of time with meetings and stuff like that. And so that's one small example. Another thing I wanted to add is with vibe coding. I recommend everyone here try it. Cowork is the easiest to use. Cloud Code is what I use. But one thing I'll say is, we have many websites. In the past, when we want to change literally one button, it's messaging the developer, asking them to change the button. They change it, I look at it, okay, the button looks weird, the font's off, the color's off, okay, the corner should be rounded. And now I have to explain that to him, and then he tries to fix it, and then, he lives in Serbia, so it's gonna be another 12 hours, and then it's on my to-do list every day, and I'm anxious, let's get this button fixed. Or I go into Cloud Code, I make the button look exactly the way I want it to look at, copy the code, send it to the developer, they post it. It's so much more simple and intuitive. And for us, it's thus far it's been a game changer, and we're consistently using more and more of it. And it's honestly been a lot of fun. It's like adults playing video games is what it feels like.
No, it is. It's absolutely right.
Okay, that's it.
Yeah, the one difficult part about it, and Alfonso and I have this conversation all the time. Today, learning AI is like almost you're trying to learn how to drive a spaceship while the spaceship has been built. Like when I tell my teams to look at the videos about AI, Claude, I said don't go more than 2 weeks, because whatever's 3 weeks is already outdated, because that's how fast things change. And I think to be successful. Somebody asked me a while back, like, what about your kids? How do like, and by the way, I have 3 kids, and I'm really scared about what their future is going to look like. And one thing I realized that you can still do fine if you have several skills. First of all, you read Rick Rubin's book. Why? Because it teaches you creativity. And I think being creative going forward is going to become extremely important. Number one. Number two, be careful with the AI. Don't let it think for you. Be a thinker. That's number two. Number three, be focused. Okay, I think focus is a huge leverage in focus. So be focused, and so creativity, focus. Well, am I missing something? No, that's about it. And
Intuition is a really big one.
Yeah, intuition. Yeah,
Because one thing, like when you it can make a website in 5 seconds, but will it be a good-looking website? And will it have the features that you want? Like, there still needs to be a person in the background who is like the taste maker, the person whose taste is others respect. And there's people like being poached from one AI company to another, and they're getting paid tons of money. And part of it is also because they're taste makers. And
Rick Rubin.
And exactly.
Yeah, but Rick Rubin, his skill is he has a great taste and intuition. That's why people hire. That's why Beyonce or whoever else, I don't know, hires them. But yeah.
Well, yeah, and then the analogy I would use is if you go to an art museum, there's a lot of beautiful art on the walls, and the truth is the person who curated them didn't paint a single one of the paintings, but they're still an artist. And curation is a skill that has been important and will continuously be more important, at least in my mind.
Yeah. Other questions?
Yeah, I'm Tom Brower from Casper, Wyoming. I was working with a company that we were trying to get lured into Wyoming called Radiant Technologies, where they build modular nuclear reactors. So it's a nuclear reactor that'll fit on the back of a truck in an airplane that has 1 megawatt of power for 5 years. So you think of the North Slope of Alaska, where they burn coal for those, or absolutely in the AI industry, where, Wyoming has a ton of things, but we certainly don't have just megawatts of power sitting around to run data centers. And so have you had any thoughts or insights into investing in nuclear reactors or modular nuclear reactors?
Honestly, I really don't have much to add there. Like it's a very niche. It's very niche, and it has been discovered. So those stocks are usually very expensive. One of our stocks, Babcock, is actually about 15-20% of their business comes from nuclear. Is that right? About 15-20% of the business comes from nuclear, but so they are probably the largest. They're probably the best company in the space of anything nuclear. Well, in addition to that, they also refuel nuclear submarines of UK, but that's a different business. So I think the majority, those modular companies been so expensive, and I really don't have an insight in honesty. Other questions?
Bitcoin.
God, this is coming from a guy who is a Bitcoin king. So, not a big fan of gold. I like Bitcoin even less than I like gold. So I don't know. Eric, I don't know how else to answer this. But now, here's where I was wrong. And where I was wrong, and I think I was wrong I never expected that we ever gonna I'm gonna say something, I'm gonna preface it. I'm gonna say something political, but it's a political point. Okay? So I never thought we're gonna elect a president who is gonna endorse Bitcoin. the only competing force against the US dollar, and go out of his way to kind of institutionalize it. So that was not my bingo card, because I think it's actually, again, this is not a political thing. Please. I would argue it's anti-American, because this goes against our interests as a country. Okay, because you're just basically endorsing our competition. And so the Bitcoin today has been institutionalized, and therefore, to my shock, and therefore I think it's probably may have more legs today than it did before, but I don't know what it's worth. It may still be worth $5,000, and that's fine too. So I have no idea. So, but maybe it's worth $100,000, Eric, and maybe $1 million, and I have no idea. And I don't think anybody does. Here's the thing. Here's the difference. I don't think anybody does. And but it is definitely something that was shock to me when when Trump did something that's would basically goes our interest as a country. So that's my answer to your question. Yeah. All right, Wendy.
Back to the AI subject. I sat with someone who I did disagree with politically on something and extolled my frontline experiences in a certain area. And she pulled out her phone and she said, well, this is true and this is true, reading off her phone. And it's like, hello, I'm sitting right here. I'm telling you, this warm body went into this environment and had these lived experiences. And what that is saying is some reporter who came in and talked to the PR representative for that entity. And now that is in the formal record, unlike my lived experience, as being the truth. So I've mulled over, how do you add into your investment selection criteria the possibility that AI is false? When you ask Grok and it feeds you information that has been collected out in the corporate media, but it's by some recent college grad from Princeton who interpreted the events through their lens, and now Grok reports it as this is how it is.
Yeah, I think this is a great question. So a couple things. Number one, people like to hate X.com, and I would argue the implementation of AI is probably the best I've ever seen. Let me give an example. I think Twitter, I'm going to call it Twitter because I hate X.com name. But if you look at Twitter and you read the post and you have no idea, you have no context, you have no idea if it's true or not, there's a button right there, the Grok button. And it tells you, it gives you the context, and it tries to tell you the truth. In a sense, it gives you different viewpoints. Okay, so I find it actually made Twitter a lot more useful because of that. Okay, now, when we search for information, a lot of times, if it's very, very important, I would use multiple search. I would use multiple searches. Like I would use Grok, and I would use Gemini or ChatGPT if it's important. Number one. Number two, a lot of times we use something called NotebookLM. NotebookLM is a product by Google, which is if you are a student or if you're dealing with documents in general, you should be using this product. This product, because what it is, imagine I can take companies' annual reports, earnings transcripts, and put it in NotebookLM, and that becomes the data source. Nothing else. There is no internet. It's just that. And then I can have a conversation and ask questions. And that has been, for us, when we do research, we very selective with the data sources. And so we can actually, we can have a conversation with AI and learn about the company. That expedited our learning process substantially. So that's another way. Also context, right? It's like you need to have a certain context of when I go for a walk every day for about an hour, and a lot of times I would just talk to Grok about an industry, and I would just it's almost like having a conversation with a smart analyst, not as smart as Max, but still smart. Okay, but I have somebody who specializes in this industry, but I still need to have some context, and so AI is not perfect, but by the way, it's getting better all the time. I think the reasoning model make it better, but again, it relies on the data you're talking about, and so from that perspective, we are cautious about it, and if it's something very crucial, we may use multiple models. But in my experience, I found to be a lot more net positive than net negative. Let's do one last question. Yes, George.
I think we own some oil stocks.
Yeah.
The price of oil has gone up rapidly.
Yeah.
Have those oil stocks gone up? Because I don't check my account very often.
Like you went from 2-3 days a day from 5. Is that? So the question is, what my thoughts on oil and oil stocks? Is that the question?
Yeah.
All right. So we own a few of them, and one of them we have been reducing as it's been going up, and it keeps going higher. So if I haven't reduced it, we would have had more money. Okay, but that's how it works. Listen, I think our thesis on oil hasn't really changed. The thesis is very simple. We're going to be driving EVs for much longer than everybody expected. We're going to drive EVs. Over the last 20 years, we basically spent a lot less money on looking for new oil than in the previous 2 decades. So you're going to have the supply is going to hit the wall. The supply is not going to increase as fast as it has in the past. So we're going to have issues with supply, and demand is not changing. So that means you're probably going to have higher oil prices. Now, the cure for high oil prices are high oil prices. As the higher price always, as prices go higher, you're going to have more investments, and it's going to get cured. Now, it's very important for me not to drink the Kool-Aid, and just to remember that's a cyclical business, okay? And also, this is very, very important. Robert and I have this conversation all the time. When we invest in the cyclical businesses, the management team that runs these businesses has to be top 5%. Cannot be like average management team. Here's why. Because the most value is created in those businesses is through capital allocation. Because you go through busts and booms, okay? And what happens to 90% of people in this business is that they drink the Kool-Aid. Oil prices go up, guess what? They become bullish, like they look at the management, and they start investing more. And they pay high prices, they buy assets at high prices, etc. And then the bust happens, okay? The management we own, like we own International Petroleum, Aker, or Canadian Natural, they zig when others zag, and vice versa. When their stock was cheap, they were buying back stock. When the stock price was, when the oil price went up, they started to issue debt because they knew at some point they would need it. If the stock price decline, if the oil price decline. So this is I wish we could own these companies for a long, long time, and we probably would own them longer if you own just average oil companies, because I think this management teams will create more value long term through counter-cyclical capital allocation. But if the oil prices stay at elevated levels, we'll be reducing our position sizes. And like we've reduced International Petroleum probably by 30 or 40% already. So for every company in our portfolio, there's one input. Like we have a model, and there is an input, oil price. We've been using $75 oil price in our models. Today, it's 100, and we haven't changed that. We haven't adjusted the price to 100. it's what's nice about it provides somewhat a hedge in the portfolio against the war in Iran, which is I can tell actually I don't have to read news anymore, because when I wake up in the morning I can just look at our old stocks and I can tell you what the news headlines are, because because they react to the news flow so much. But anyway, so we have about 20% exposure to energy today. If oil price persists at higher level, it's probably going to decline little by little. We're going to be very kind of thoughtful. But if you ask me where it's going to be 5 months from now, how much exposure is going to be, I have no idea. But what we own today, we really like, and at higher prices, we'll like it less. So we'll reduce. So that's how I look at it. All right. Well, I think this is it. Well, thank you so much for coming. Thank you so much for coming. I want to tell you how much I appreciate you for your trust you've given us. And I'll be around if you have questions. My team, Cyrus is there, Robert is, and others will be around. Jonah is happy to answer more questions from you. Anyway, thank you again. Thank you very much, guys. Thank you.